Hello and welcome to Tax Matters, your home for education and information on taxation. My name is Muyiwa Matuloko. Interesting times are here. On Wednesday, April 11, taxpayers were suddenly hit with the cheering news of the extension of the tax amnesty program introduced by the federal government of Nigeria. Following appeals and pleas from stakeholders, President Muhammadu Buhari has granted an extension of 3 months, 90 days. So, as things stand today, the Voluntary Assets and Income Declaration Scheme will run a course of 12 months. Under the program, taxpayers who underpaid or those who have not fulfilled their tax obligations in the last 6 years have the opportunity to come forward, declare their true assets and income, compute the due taxes, and make payment in exchange for waiver of interest, waiver of penalty, freedom from tax audit and investigation, freedom from prosecution. Of course, there's a guarantee, there's an assurance of confidentiality of information provided by the taxpayer. And of course, the icing on the cake, the opportunity to negotiate instrumental payment of the established taxes. Beautiful, isn't it? At the 140th meeting of the Joint Tax Board held in Osogbo, Osun State, the Voluntary Assets and Income Declaration Scheme was on the front burner. Dr. Armstrong of the Federal Ministry of Finance was on hand to make a presentation aimed at preparing the tax authorities at federal and state levels for the post-VAIDS period.
The KPIs that we're using to measure the performance here are 3 simple KPIs. One is the fact that we want to use this opportunity to raise at least $1 billion of revenues for both federal as well as states. And then finally, to lay a foundation that allows each of the tax authorities to be able to predict year-on-year growth with respect to revenues, rather than doing that in the dark.
To achieve these goals, the project has been divided into several moving parts. The first part is a project known as Project Lighthouse.
Project Lighthouse is really a technology platform that allows us to aggregate data from multiple sources to help you, the tax authorities, to have better intelligence and information about taxpayers, as well as their profiles, and avoid a situation whereby there are loopholes that the taxpayers will exploit knowingly or unknowingly and avoid paying taxes. Let me give you an example. I've met a couple of people. Somebody lives in Lagos, for instance, and he has a house in Lagos. He also has a house, say, in Kaduna, and the house in Kaduna, he's collecting rent. His state of residence is Lagos. So the area that Lagos has visibility over will be the revenues that he's collecting in Lagos. But the guy also has a house in Kaduna where he's collecting rent from. In Kaduna, he does not pay tax on that because he doesn't live in Kaduna. It's a personal income. In Lagos, he doesn't because Lagos doesn't have visibility over that. So it's a major issue. And then we also have situations whereby people visibly, and we know, we have the data, we have the intelligence, that they have money that they use to acquire properties, either locally or abroad, and that money was never taxed at any point because the authorities don't have visibility over that. We also have situations whereby companies come and file their taxes with FRS, but the directors of those companies are not tax compliant. So the only way we can plug those loopholes is to ensure that we have ways of sharing information. And I know that is one of the major areas that JTB has been working really hard on, to provide a platform that would allow the tax authorities to share information that would hopefully drive up our revenues. I give another example of that. If you go through CAC records, there are a lot of people who are directors of companies that are declaring dividends, that are profitable. But those directors are not taxpayers. At the moment, we have information on land registries from a number of states. We have information about corporate entities who we believe, for instance, we have companies, for instance, that got jobs from federal government, yet the revenues that they declare to the tax authorities are less than the contract that they got. So we think that if the tax authorities leverage on that information, they can really see that there are a lot of individuals who ought to be paying taxes that are not paying tax, that live in their states. And then there's a second aspect of it, which has to do with the online declarations. Like I mentioned before, what that does is that it provides a platform for people to declare online, and we've been receiving quite a bit of those, and we've submitted those that we have received to JTB to distribute to the various states. And we've seen that within the last couple of days, the number of people that are declaring online is going up. And as we do that, we're going to channel the declaration that we get through JTB, and then JTB can now release that to the respective tax authorities. One of the things that we are getting as feedback is people not sure of what they would get as evidence that they have participated in the amnesty program, because it is clear and distinct from the tax clearance certificate. Now, the amnesty program says that if you declare your income and your assets and your income, you will take advantage of those benefits of not paying interest, not paying penalties, and then you'll not be subject to audit as well as prosecution. Now, people want to be able to have an instrument that is evidence that they have truly participated in that. Whether or not they have already paid the liabilities that come as a result of the assessment is a different issue. So it is important that we make a distinction between you taking advantage of the amnesty program and declaring your income and assets, and the fact that you would have already paid the liabilities that have been established by the tax authorities and getting the tax clearance certificate. I'm sure the chairman will speak a lot more about that later. But this is important because we're getting a lot of questions around that issue.
And the executive chairman, FIRS, Chairman Joint Tax Board, did indeed speak on the matter. Mr. Fowler made a distinction between the VAT declaration certificate and the tax clearance certificate.
Your tax clearance certificate still remains the main clearance and not a VAT certificate. This just says that they have declared X amounts of tax due and you have given them the approval to pay it over 3 years, 2 years, 1 year, as the case may be, and you give them that certificate.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government covers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
Welcome once again. The year 2018 is still young, still very young. Moreover, the federal government budget for 2018 is still being awaited. And so it is in order to look at what 2018 portends. This was exactly what was done by one of the leading tax and audit firms on March 23, 2018. It was tagged the CFO Outlook Survey Report presentation.
We asked about stay-awake issues. What keeps CFOs awake at night? And the top 3 issues that came out of the survey, interestingly, in this order of priority, number 1 was tax, regulatory and government policy, which is why I'm delighted today that we have the leaders of tax administration, not just at the federal level, but also at the state level, here today to have a dialogue. Well, we asked a general question and says, with respect to the government's thrust on tax policies, how do the following issues rank for you? And by far, the biggest issue coming up was concerns around what CFOs described as the aggressive tax collection drive. But it wasn't just about an aggressive tax collection drive. When we sit with CFOs, all of them say to us that at the end of the day, they recognize that companies and individuals must pay taxes, and we must pay fair taxes. One of the key issues was the whole question of multiplicity of taxes, and I would say some sense of confusion around who is really in charge here. I remember I went to see a CFO, and as I was in his office, over a space of 30 minutes, he got calls from 3 different regulators. There was a call from, of course, the CBN, there was a call from the NDIC, and then there was a call from RAMFAC, And I said, okay, RAMFAC, why are they calling you? And he says, it's about tax matters. So we then had a discussion, and he explained to me that on taxes, he's dealing with RAMFAC. He's, of course, dealing with Lagos State and FRS, which is to be expected. He says to me that his CEO has been summoned to the National Assembly, also on taxes. He's dealing with possibly, told me a story about EFCC, also on taxes. So the question is, there are multiplicity of agencies chasing taxes. How do, and how are CFOs who have a responsibility for managing the financial affairs of the company, how are they spending their time if it has to be dealing with several regulators? So that whole issue, I know, is an area of concern, and I look forward to the discussion we'll have on it. And of course, there was the question of interpretation of the tax laws and how the process of resolution is reached when there are disputes in that area.
Mr. Babatunde Fowler, Executive Chairman FIRS, was at the event. He delivered the keynote address and addressed some of the issues raised.
I'll try and answer 1 or 2 comments. That who are the real tax administrators? Is it the EFCC? Is it the Ministry of Finance? Is it the Ministry of Justice? Is it ICPC? Or is it RAMFAC? And what has happened is that during a FAC meeting, some issues were brought up which bordered on non-remittance, mainly of withholding tax, VAT, and those are taxes or revenue that are shared between 3 tiers of government. On the VAT level, 85% of that goes to the states, 15% goes to the federal government. But when it comes to withholding tax, it is shared between all 3 tiers. And it was brought to the notice of that meeting where FIS is a member that especially a number of banks were holding on to VAT, were holding on to withholding tax, and were not remitting the same. And at that meeting, it was decided that RAMFAC should look into it. Now, us as the agency mandated to collect tax, other agencies cannot do an assessment, but they can monitor and also investigate. Now, during that period, over 10 billion naira was found not to have been remitted. Last year, 22 billion naira of withholding tax was found not to have been remitted. And in discussing with other colleagues, other stakeholders, and they said, Mr. Chairman, why is RAMFAC coming to check our books? Why is EFCC, ICPC coming to check our books? And I'll explain, it's very simple. When a taxpayer who applies for a tax clearance is not given one and finds out that he did a job for a state government, did a job for a multinational, did a job even for a local business, withholding taxes were deducted, it was expected that at the end, before the end of the next month, those taxes should have been remitted on behalf of that contractor, so that when he's filing his returns, he has withholding tax credits. But when he doesn't have that, he's at liberty and has the right to report to the FCC, which deals with economic crimes, or reports to FIRS, or report to other agencies of government. And so they do get involved at that level when they do receive notification of non-remittance of those funds. Now, those funds basically do not form any part of the financial transactions of the organization. The organization withholds those funds and acts as an agent to government to remit those funds. So meaning that an agency or a state government or an organization that deducts withholding or charges with VAT, deducts withholding tax, cannot spend that money as part of its operations. But what has FIRS done in this respect? We have given you the opportunity to determine immediately if your withholding tax has been deducted, whether it has been remitted. We deployed these solutions whereby once you give us your email address, anytime any payment is made on your TIN, you get an alert, you get an email, you can download that email and you'll be able to print out your receipts, whether it's withholding tax, whether it's CIT, any payment you make. So even if you had a consultant who was going to help you pay on your behalf, once that payment is done, you get an email. Now, a number of corporate organizations have taken advantage of this, and it's very simple. You download the receipts and you can confirm whether that receipt is genuine with a smartphone. Some state governments also deducted withholding tax and did not remit. So in working with the Ministry of Finance, we came up with a program whereby any state government that did not remit withholding tax deducted will not benefit from budget support. And also any state that did not remit VAT will not benefit from budget support.
Following Mr. Fowler's keynote address was a panel session on challenges of tax administration in Nigeria. Mrs. Oyeyimika Adeboye spoke from a private sector taxpayer perspective.
What has government done that's good for us? We feel communication has been very good. We've really been able to leverage on IT. The communication in Nigeria, honestly, from where we were before and how we're managing our business now has been fantastic. When we sit in rooms and people ask us, why is your cost profile so high in Nigeria? Why is it so high? I say we generate power, we generate water, we have to generate our water. We have to put all the infrastructure in place. You know, our trucks are going through bad roads. And then they ask me, well, you pay your taxes. And then tax and regulatory concerns. You know, when we did our budget for 2018, you know, one of the things we had there was land use charge. And we just replicated because it's based on the valuation that we have. We already have something from the state, so we complied based on that and budgeted based on that, only to wake up. So now my stay awake issue. Only to wake up one day and find a bill in our hands that I'm wondering, do I going to take a price increase on my product? You can't take pricing because your land use charge has gone up. So it's not going to go to the consumer, so it's going to my bottom line. It's going to reduce my profit, and it's going to reduce my taxable profit.
Still from a taxpayer private sector perspective.
People with formal employment feels cheated and unfairly treated. Their focus is more on their employers. But what are the state governments doing? What's the FRS also doing in order to reach the unreached people in the informal sector to ensure that they pay their taxes as well? I think you can actually collect more money from PHNIs than you're currently making from those of us who are in employment. And efforts have to be made. We feel, as observers, that maybe some people are seen as sacred cows. We know who they are visible in society, but how much tax are they paying? And that really needs to be done.
There was a robust question and answer session.
Another question, quickly, for Mr. Ayodele Subaru. Recently had a situation where an employee mid-level was notified that LRS plans to move him into the HNI direct assessment category. Although the company remits PAYE on this individual, When will this situation occur, and what can the employee do about it?
I'll give you the possible reasons. First, we decided this year that we need to focus on directors of companies. A lot of directors of companies, big and small, pay under the PAYE system. So we're only able to tax employment income, while many of them engage in all sorts of economic activities. Some of these employees, like you said, are actually entrepreneurs also. They're promoters of businesses. They have incorporated companies that they manage. Yes, they are in employment with one company, but they also have 5 other companies. So in profiling directors of these companies, we discover that they all want to hide under the payer ID linked to employment. So we decided to look at them more closely and to migrate all directors now. We're going to move to HNI, but it's only an administrative move within LRS. It's just one agency we have, whether it's HNI department or PIT department, it's basically the same.
Are you getting ready for the 20th Annual Tax Conference holding in Abuja, Federal Capital Territory between the 8th and 11th of May 2018? Let's share with you highlights of the intellectual feast that awaits you. To be a part of this greatest gathering of tax experts in Africa, visit www.citnevents.org. See you at the 20th Annual Tax Conference. See you next week on this program. Thank you for watching.